And let's deep dive into the biggest moves shaking up global markets. From New York to New Delhi, US trade policy kept investors on edge, fueling another wild ride of gains and losses. We break down all the action, the key takeaways, and what could drive markets in the days ahead. Take a look.
US stocks rebounded on Friday, but still ended the week sharply lower as concerns over trade policy and economic growth rattled investors. The Nasdaq rose 0.7% on Friday, but all three indexes posted their worst weekly declines in 7 months. A weaker than expected jobs report raised concerns about a slowing economy, with non-farm payrolls growing by just 151,000 in February. Meanwhile, uncertainty over US tariff policies continued to fuel volatility in other markets, including Europe. The Stoxx 600 index logged its first losing week of the year. Luxury stocks were hit hard, with key players down between up to 7%, as fears of US tariffs weighed on consumer sentiment. In Asia, markets mirrored Wall Street's losses. Japan's Nikkei 225 dropped 2.17% on Friday, closely followed by South Korea's Kospi, Hong Kong's Hang Seng, and China's CSI. 300 also slipped as weaker than expected Chinese export data fueled concerns about slowing global trade. Indian stocks ended the week with gains, but the Nifty 50 and the Sensex have been the biggest losers in the region in 2025. Oil prices rose on Friday but pulled back from session highs after the US threatened sanctions on Russia over Ukraine. Brent crude settled $70-50. Gold eased on Friday due to profit-taking but posted a 1.7% weekly gain, as safe haven demand remained strong amid global uncertainty. In the week ahead, investors will keep an eye on Fed rate cut expectations, developments in US trade policy, and geopolitical tensions, particularly around Russia and Ukraine. Business Bureau, WION, World is One.
All right, for more on this, we are now being joined by Dr. Andrew Freires, CEO, Ecognosis Advisory Limited, live from Montevideo, Uruguay. Dr. Freires, thank you so much for joining me here on World Business Watch. Sir, most global markets have reversed their gains from last year. Do you see negative market returns affecting consumer sentiment?
Well, clearly, I don't need to see anything. The markets are actually telling you, and in particular, of course, the Sensex that has tanked out in the case of Asia. What markets seem, it's very difficult for me to be telling you about the markets. The markets is a number of people in individual places that trade stocks. So I can only observe their behavior vis-a-vis of what may be facts, what might be opinion. And personally, I think the concerns about the so-called trade war are massively exaggerated. They are massively overestimated on their impact because they fail to see that this is not a trade war. Okay, India is not imposing tariffs on Thailand. Thailand is not imposing tariffs on Brazil. Brazil is not imposing tariffs on Greece. It's the United States who is imposing tariffs on everybody else. So this is a war that started by the United States. Now look, United States accounts for about 11% of global trade. I'll say that loudly, 11%. The other 89% is us, outside the United States. So why are we really so obsessed about trade with the States, whereas we should be obsessed about trade amongst ourselves? I fail to see this at all. And I can see why United States dominates the markets, dominates the media, including yourself, of course, okay, because it happens to be the biggest single economy in the world, yes, and it has a rather eccentric president that knows how to hog the media. Forget about that. If I was a newspaper editor, I will instruct my newspaper to put anything, not at Trump's, anything that United States announces on page 17 on the bottom left-hand side. Disappear it from the headlines, and let's see what happens.
I hear your point.
This is not going to happen.
I hear your point, Dr. Freires. Historically, as a luxury has usually done well despite recessionary fears. But at this point, you feel micro markets like luxury will also see weaker consumer demands due to these tariffs. You've made your thoughts clear on, how far we should be considering the tariffs, and the effect is exaggerated. But when you look at luxury, do you feel any kind of effect on this aspect?
Well, I don't need to feel anything because the markets are already coming down. Look, the luxury market had a very significant pickup from about 2019, right after, more or less at the beginning, and then the recovery from COVID to about 22, 23. It did exceptionally well. And then, of course, now it is not. And anything that affects sentiment potentially affects luxury. But then I'm talking nonsense, because luxury appeals to a very small percentage of the population that got better things to do than read the headlines about Trump. At the same time, however, if the stock markets are not doing well, then that small section of the population that dominates the stock market will feel somewhat different. And of course, China, that has been a major market for the luxury goods, is flat as opposed to accelerating. And the most recent policy measures we've heard, they're addressing themselves, of course, to increases in consumption, and not necessarily consumption of gold watches and gold luxury items or expensive leather goods. So the answer is you don't need a Nobel Prize, and most definitely I will not be given one, to tell you that at the time that the seemingly world markets are in a turgid mess, and with no real sense of direction and being swung all around the place, not surprisingly, the luxury goods gets hit.
Dr. Freris, you think markets are overreacting to the tariffs? Have markets corrected deeply enough for investors to buy the dip, or do you see more pain ahead?
Massively, because nobody sits down. If you think about this, I will challenge anybody to show me some let's say, calculations or some research that has been done by major media, on what this is going to do to individual countries. Never mind the globe. This really doesn't matter. Hello, I would like to know what's going to happen to Japan, by how much this is going to impact Japan. Let me give you a number that I did. I looked at the amount of exports that China sends to the United States. The most recent numbers were between 22 and 23. And then I calculated that amount of exports going to United States as percent of China's GDP. Read my lips, about 3%, 3% of GDP. Let's pretend that the tariffs that Trump is imposing cuts those exports by half, which is a wild exaggeration, but completely wild exaggeration. Then China may see 1.5% of its GDP, not growth, GDP coming down. That can be easily made up quickly by fiscal policy. So here you have China, the biggest trader, the biggest partner with the United States. And when you do the numbers, you say, I'm sorry, what's the fuss about? I mean, what is it about? I don't understand.
I hear you. And finally, sir, the Fed has said that it may not look to cut interest rates as fast as economists forecasted. Would that be a double whammy for consumer demand?
Not really. Because the expectations now, rightly, and whatever Trump and his Minister of Finance says, and as an ex-professor of economics, I will fail them with laude for not passing 101 basic economics. I mean, this is not an opinion. The tariffs is not going to affect inflation. Of course they will. It might not be a one-off effect, but it may last very well for a year, and the Fed is not going to cut interest rates when inflation is accelerating. And the last numbers we had from the United States, actually, without even waiting for the tariffs, there are about 4 basic measures we look. One of them was already going up. And none of them are below 2%, which is the target. So how can the Fed possibly cut interest rates? They will not.
All right, Dr. Freris, thank you so much for joining us here on World Business Watch, sharing all your insights and all your thoughts on where Trump's news and tariffs news really stand on the global scale. Thank you so much. That was Dr. Freris joining me from Uruguay.